Is renting forever smarter than buying a home in 2026? Everyone says buying is always better or renting is throwing money away. But in 2026, with home prices still elevated, mortgage rates around 6 to 7%, and rents stabilizing in many areas, the math is closer than you think, especially for lazy investors. Let's compare renting vs buying with real 2026 numbers. First, the classic argument for buying. You build equity and the home appreciates. The average U.S. home price in early 2026 is $420,000 according to National Association of Realtors forecast. Say you put 20% down, $84,000 plus closing costs, $12,000. A 30-year mortgage at 6.5% on $336,000 equals $2,125 per month, principal plus interest. Now add property taxes, 1.1% national average equaling $385 per month. Don't forget insurance, $125 per month. Regular maintenance, 1 to 2% of home value year equals $350 to $700 per month average. That brings your total monthly cost between $2,985 and $3,335, often more than rent in many markets. Renting. Average U.S. rent for a similar property is around $2,100 per month according to Zillow 2026 estimate. No maintenance, no property taxes, no down payment, no closing costs. The hidden buying costs. Opportunity cost of that $96,000 down payment plus closing. Invested in index funds at 8% average return. You're looking at $1.1 million in 30 years. A 2026 NYU Stern study, Furman Center, found that in high-cost cities, NYC, SF, LA, renting plus investing the difference outperformed, buying by 2 to 4% annually after fees and taxes. Nationwide, buying beats renting in 60% of markets if you stay 10 or more years, per Realtor.com 2026 break-even analysis. But in expensive coastal areas or if you move often, renting wins. 3 lazy factors for 2026. Flexibility. Renting lets you move for jobs or lifestyle without selling costs, 6% commission. Inflation hedge. Homeownership locks your principal interest payment, fixed mortgage. But rents rise with inflation. Leverage risk. Buying amplifies gains but also losses. A 20% home price drop wipes out your equity. The lazy investor approach. Rent where you want to live. Invest the down payment plus monthly difference in low-cost index funds. Example, rent of $2,100 versus mortgage of $3,100 total cost. The $1,000 per month difference plus the $96,000 down payment invested at 8%. You are now over $1.5 million in 30 years. Buying makes sense if you plan to stay 10 plus years, love homeownership, and are in a moderate cost area. Renting forever makes sense if you value flexibility, live in high-cost cities, or just want to invest more aggressively. There's no universal winner. Run your own numbers with a rent versus buy calculator. NerdWallet or NYT have good 2026 updated ones. Hit the like button if renting just made sense for you. Comment rent or buy. What's your choice in 2026? Subscribe for more no-hype money decisions. Thanks for watching. Now go be lazy and get rich.